the market is very, very broad and very, very liquid. I think the biggest difference nowadays is that you have a variety of players composed of banks. Still, continental Europe is still a very market which is dominated by banks. You have insurance companies. Now, not only, let's say, existing as an intellectual concept, but also that get into real transactions as they did since many, many years already in the US and in UK. But this wave is now sweeping over to continental Europe and debt funds. But all of them, be it insurance companies, banks, and debt funds, they are cannot be regarded as a clear identified group of lenders. They have a very different strategies. So some of them are doing core, some of them are doing more added value and opportunistic on development financing. The challenge will be to bring those lenders together for a very specific product. But I think a borrower or an investor nowadays seeking for a financing in Europe, he has a wide choice. So, and then it depends on what is his investment strategy. Is he short-term or medium-term or long-term? So also in that respect, he can choose the right partner that fits his investment needs the best. Also insurance companies, why are they entering into this activity? For insurance companies, this is certainly an alternative and defensive way to get invested into real estate. They are not financing because they are seeking for a specific market share or let's say a dominant position in Germany or in France or in Spain. They just have to place existing insurance funds on behalf of their internal clients. So there also you have a wide range. You have the life insurance companies. They are looking for long-term, ideally fixed-rate investments. Then you have the non-life insurance companies, the P&C accounts. They are looking for short-term and medium-term placements, both fixed-rate and floating rate. They all look to diversify their investments. At least this is the case for Allianz insurance companies. They like to get continuously to get invested in real estate. And if prices, for instance, on the equity side have become very high and very expensive, then real estate financing allow them with a very defensive investment product to get invested in a market which maybe from the equity side has become too expensive. So that's also an angle that drives insurance companies into the segment, because if maybe the investment market is too hot, or if prices are too large or volume is too big, then lending allows them to get invested with a different way. Next to for an insurance companies, lending will never replace equity investments. It will never replace indirect investments by way of a fund participation. It is just a supplementary way, an alternative way to get invested in this asset class.
I think the banks are coming back to the market because they have done their homework. I think 2010, 11, 12, they had to clean up their balance sheet. Nobody was really actively going out to spend money because they had to clean up the balance sheet, full stop. And I think it's as simple as that. Then they have sold off a number of their debts. Then they have seen that your book has gone down tremendously. And all of a sudden management says, well, what's going on? Our exposure to real estate, our real estate loans are so much down. And now they're coming in professionally, as usual, and look for possibilities to place their money at a reasonable rate. And I think also there's one word which I haven't heard this morning. It's simply real estate has become, over the years, a separate asset class. So I think you have stock, you have bonds, you have real estate nowadays. And you see it already in the allocation of insurance companies. I think that is right. The how to say it, regulatory capital which insurance companies has placed also into real estate has grown over the time. So there is not only private wealth, family offices, and people who have collected money in the US in private equity who are spending money, but there are also the general investors like insurance companies who have allocated much more money to real estate as they have done before. So I think that's the reason why there's so many cash around and free liquidity, which looks simply for assets. And from my understanding, it's a new asset class. People are more professional now going into real estate as financiers or as investors.